So, hello students. Next question that we are going to solve on operating activity is so is on operating activity. Okay. So what we have seen previously is that in the question what is given, a balance sheet is given, a notes to account is given, and additional information is given. Okay. But in this question you don't see any balance sheet given. What is given here? A PL is given here. Balance sheet is not given. Note to account is not given. Yes, obviously an additional information is given. Okay. So what is the difference when balance sheet and when balance sheet is given and when PL account is given? When PL account is given, there is no need to make a separate working note for calculation of NPBT. There's no need. Why? Because you see there are two NPBT here. There's two net profit here. One net profit is 1,05,000, another is 80,000. This is after tax and this is before tax. So as we can see, we need net profit before tax. So we will take 1,05,000 directly. There's no need to calculate. Okay, there's no need to calculate. So while making a solution, the operating starts with net profit before tax, net profit before tax, then adjustment of non-cash and non-operating activity, and then increase or decrease in working capital, that is current asset and current liability. Finally you pay the tax. Uh, and then you get cash generated from operating activity. Okay, so NPBT is directly given, so we put NPBT here. Okay, we will directly put NPBT. Okay, so we will put net profit before tax. How much? 1,05,000. Fine. Then adjustment of non-cash and non-operating activity. What are the probable non-cash and non-operating? So depreciation, amortization, interest paid, interest received, profit and loss on sale of asset. Okay. So you see there is no sale of assets, so there is no profit and loss. Now let us see for interest. There is no finance cost, so there is no interest. Revenue from operation, there is no other income, so there will be no other income which has to be subtracted. What is there? Purchase of stock in trade, which is operating. Changes in inventory is also operating. Employee benefit is also operating. Okay, depreciation is non-cash, so we will add depreciation here. Okay, other expenses is also operating. Tax, fine, tax we have done. This everything is current asset and current liability, except this one I will tell you later on what to do with this item. Okay, so done. So nothing else is there, so you add 1,05,000 and 50, you get operating profit before working capital changes. Working capital changes means current assets and current liability, increase and decrease in current asset and current liability. So let us start one by one. Okay, so debtors. So how will we know whether it is increasing or decreasing? Simply current year minus previous year. So which is current year? 2018 will be current year and 2017 will be previous year. So 75 minus 62. 75 minus 62 will be 12,500. Okay, 12,000. Wait. 75,000 minus 62,500 will be 12,500. This is plus. So increase in current asset will be subtracted. So see, increase in current asset will be subtracted. 12,500 is subtracted. Okay. Next, so bill receivable, current asset, current year is 15, previous year is 2020. So 15,000 minus 20,000 is minus 5,000. So that means it is decreasing. So decrease in current asset will be added. So see, decrease in current asset will be added here. Okay. Next, creditors. Creditor is current. Okay. So current liability, again sir, how to find current year minus previous year? Current year is 37,500 and previous year is 42,500. How much is that? 5,000 sir. 5,000 minus 5,000. So decrease in current liability will be subtracted. So decrease in current liability subtracted. Okay. Next, inventory. Inventory, again same thing sir. Current year is 67,500. 67,500 minus 55,000. How much is that? So 12,500. Positive, negative, positive. So that means increase. Increase in current asset will be subtracted. So inventory is subtracted. Okay, very good. Next. So next is outstanding salary, like current liability. Current year is 7,500. Previous year is 5,000. How much is that? 2,500, sir. Positive. That means increase in current asset will be added. So increase in current asset will be added here. Okay. What is next? Next is a prepaid expense. Prepaid insurance, prepaid expense. So current asset. Okay. Same thing. Previous year is current year is 13,750 and minus current year 12,500. How much is that? 1,250. Sir, positive, negatives are positive. That means increase in current asset will be subtracted. Increase in current asset will be subtracted. Okay. So it is very important, students, that you must have seen the previous video where I have explained the format nicely. Okay. Just for your convenience, again I'll explain. Increase in current liability will be added. Decrease in current asset will be also added. Okay. Decrease in current liability will be subtracted. Decrease in current asset will be increase in current asset will be subtracted. Okay. So this is the theory. So this you have to find by cy minus py. This you will find by cy minus py, and then whatever is positive, then you do according you positive current liability. Positive current liability means add, positive current asset means subtract. So like this you have to understand and do the thing, do the adjustment. Okay. Once that is done, you add the positive item, record it here, and add with this one. You get 1,60,000. Or you can do one thing: you add all this and put the amount here, and then you do this plus this. No, any way you can do. Okay. So let us follow the solution. So all the positive item will be recorded here. All the negative item will be recorded here. Okay. Forget this. Let's say there is nothing like this. So positive item will be here. Negative item will be here. After adding this plus this minus this, you'll get as generated from operating activity. Operation, not operating activity. One thing you have to subtract now is tax. Student, there are few notes which I was supposed to give, but since there was no much class participation, so I to move forward. I thought you have understood everything, but now I see you're not solving any questions. So I don't know if you have any doubt. If you are feeling shy to post it in the group, you ask me personally. No problem with that. Okay, so you can comment me personally in my chat. Okay, I'll address to that. But the thing is, you have to understand. That is more important because everything is so related. No, cash flow statement from operating, if you'll not understand, obviously when we go to investing, you'll face problem. Okay, so therefore, if you still think that you need to ask, please ask me. I'll repeat. I'll explain. Okay. Anyway, so if you see in the additional information anything about fixed asset, directly make fixed asset account. If you see in additional info anything about uh, provision for tax, make provision for tax account. Okay. If you see anything about accumulated depreciation, make accumulated depreciation account. For the time being, in this case, there is additional information. In the additional information, what is given? Provision for tax. So let us make provision for tax account. Okay. So provision for tax account. Okay. Provision for tax account. What is provision? So provision is a liability. We'll have a opening balance as credit. So what is the opening balance here? Which one is opening? This is opening, sir, and this is closing. So by balance BD 7,500. Which is a closing balance? A closing balance is this one. So to balance CD 5,000. Clear? Clear, everyone? What else is given? What other information is given about tax in the question? Is there any information given about tax in the question? Yes, sir. One information is given. What is that information? That is tax paid, sir. Tax paid. How much is the tax paid? Tax paid is a 25,000. So when you pay the tax, when you pay the tax, Is this tax paid? No, sir. It is provision for tax. So see, understand, the balancing figure will either come this side or the balancing figure will come this side. Understand this very carefully. The balancing figure will either come on the debit side or on the credit side. We know that provision is a liability. If liability is debited means it is decreasing. If liability is credited means it is increasing. Okay. Again, if liability is debited it means decreasing. If liability is credited means increasing. And when will the liability balancing figure come on the credit side? When new provision is made. Provision is made, so provision will obviously increase, and provision is a liability. Increase in the liability will be credited. Okay, when the provision will be subtracted. So when you pay the tax, when you are making provision for the purpose of paying it in the future, so when you pay the tax, obviously the provision will decrease. So when you pay tax, the provision will decrease. Again, when will the provision increase? When you make oh, when you make new provision. And when will be debited? When it is decreasing. And when will the provision decrease? When you pay the tax. So in this case, you see, what is the tax paid or provision made? So they are making a provision. They are making a provision of 25,000. So if provision is made during the year, it will increase the provision or decrease the provision. Tell me. So if provision is made, obviously provision will increase, because provision is decreased only when tax is paid. But here it's not said tax is paid, it said provision is made. Okay, so therefore provision will increase. So if provision will increase, debited or credited? So obviously credited, because provision is a liability. So just credit it. So it is not a balancing figure. We'll make provision. And how will the provision is made? Provision is made in statement of PL. If you remember in class 11, provision is a charge and charge is recorded in the PL. Okay. How much is that? 25,000. Okay. Now total the because nothing else is mentioned in the question. So just total and find the balancing figure. The total here will be 22,500 or 32,500 minus 5,000 is 27,500. Okay, so balancing figure this side, as I said, balancing figure on the debit side means tax paid. And how will you pay tax? To bank. So this tax paid will be recorded. This tax paid will be recorded here. See, 27,500. So once you added, I said no to, once you added this plus this and subtracted this, you got cash generated from operation. You have to pay tax. Tax paid will not be this, because this is a provision created. So therefore, tax paid will be the amount that you calculated from the account, that is 27,500. And then you subtract the cash generated from operation and tax paid, you get cash flow from operating activity. Okay, once again I will repeat, or I'll explain you the provision for tax account. Provision for tax is a liability, will always have opening credit balance. So credit balance will be recorded. This is opening balance, will be recorded here, and this is closing balance, will be recorded on the debit side. Clear? The balancing figure will be either in the debit side or credit side. So debit side means if liability decreases, it is debit. Credit side means if liability increases, it will be credit. When will a provision increase? When a new provision is made. And when will the liability provision decrease? When tax is paid. So read the question and see whether tax is paid or new provision is made. So they are saying provision for tax. That means a new provision. This is a new provision. So new provision will increase the provision. So if the provision is increased, it will be credited. So see, I have credited here 25,000. And how statement of PL? So why do we write statement of PL? Because if you remember class 11, provision is a charge. Provision is a charge, and charge will be debited in the PL. So see, charge is debited from the PL. So this is statement of PL account debit to provision for tax. Okay. Then nothing else is given, just balance it, add this plus this and subtract this. You got this amount. So you don't know what is this amount, but you know it is in the debit side. So a provision will be debited when provision is decreasing, and when it is decreasing, when tax is paid. Okay, so this is bank, you pay the tax to bank. Okay, and this payment of tax will be recorded at the end of the operating activity, that is tax paid. See, income tax paid 27,000. This 27,000 goes there, and you get cash flow from operating activity. If you still have a doubt, you can comment below. Any topic that you have not understood, so I have not understood provision for tax account, please explain once more. I'll explain again. Whatever you have not understood, why 7,500 is debited, I mean it's credited, so why 5,000 is debited, anything that you want to ask, please ask, comment below. I'll definitely explain again.